Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, June 19th, and we got a couple items here to note. So we'll start with the one economic news release we got scheduled for today, and that's the housing starts for May's numbers. Back in April, we had 744,000 uh, properties, and it dropped. We figured it would come down a little bit, 720, and it did. It dropped a lot more than we anticipated, so a lot more than the forecast. So we're going to jump over to the headline news, and we'll see that the stock market's up. So when we get bad economic news that the housing starts are down, even more than forecast, why is that? Um, well, part of it is we had the Fed begins their FOMC meetings today, and they'll have their announcement tomorrow. But this is the reason here is optimism regarding the further stimulus by Fed. A lot of people, because they see the housing starts decrease so much, that maybe they might create more incentive or more fire for the Fed to talk about and potentially talk about continuing the Operation Twist or some type of stimulus package. I think some are speculating that maybe Operation Twist might be more buying mortgage-backed securities this time around versus the treasuries and such. So it'll be interesting to see what they say tomorrow and how. If they even mention anything about it, if they don't mention anything about it, we could potentially see a drop in the stock market based on that information, perhaps even a drop in the bond market as a result, because that as we see the higher bond prices, they could be building that into an anticipation that the Fed's going to be buying mortgage-backed securities. So that may be a reason why we're seeing the bond market going up so much recently. Also, overall news not so rosy in the European community. Spain, as we've talked about yesterday, their yields on their like the 10-year treasuries are up over 7%, which is unsustainable for a country to be able to maintain that type of cost on their debt to continue with that. Germany saw their sentiment drop in the lowest in 13 years. And one of the things after the Greek bailout, there's talk now that now we have the elections past us on Sunday from Greece, that it sounds like there's pretty much almost a the conclusion that what will happen is that they're going to probably the rest of the EU, probably the investors will get together and probably make some type of revisions to the bailout to make sure that there's some flexibility in there and make it so that it is sustainable to make it work for Greece and obviously for the investors. So we may see some changes in there. But again, we still got to wait to see what's going to happen with Spain, which is the big one to talk now, but also, Italy's on the horizon as well. So let's go ahead and take a look at the bond market, see what interest rates are doing today. And right now we're still up there on the 105 level. We're down about 6 basis points. We start off about the same as where we left off yesterday. As you saw, we did touch the ceiling and pull back a little bit, so we're kind of in this range. We may remain in this range until maybe tomorrow when after the Fed, see which rate way we're going to go. If it's favorable, it could break up for the bonds. If there's no mention of the twist continuation or mortgage-backed securities, it could potentially drop, and we could see that that gap we had a couple of days ago, last week rather, a big opening gap we had between the 10-day moving average, as you saw the red, and the green there, that could be closed. That could potentially be closed. So at some point it will close, but we'll have to wait see when that happens. But right now rates are about the same as where we were yesterday. You guys have a wonderful day. See you guys tomorrow. And again, thanks for all your support, and I hope you guys see you guys at the Mike's Daily Market Report.com and subscribe. Have a wonderful day.